After reporting their earnings just over a week ago, Intel stock saw one of its biggest sell-offs in its history, and since then the stock has continued marching lower, now sitting down over 20%. Now if you're a value investor, you've probably been monitoring the stock pretty closely the last few days because it is approaching valuations that some investors could arguably say is attractive. Now, in my opinion, I'm going to go through this in the video, but I think that there is still some more downside before I'd say that Intel is undervalued. But really, I can't fault anyone for starting to buy into Intel stock here today at these prices. But who knows, guys, maybe this is the beginning of a massive decline and shift in the industry where Intel continues dropping continuously, month after month after month, and competitors start eating up their lunch. So maybe this is a shift, maybe not, maybe it's an overreaction, maybe not. That's all the stuff I want to discuss in today's video, and I actually want to provide you some insight on comparisons between Intel and the competitor AMD, and I want to show you why, regardless of whether Intel is going to see some slow declines or whatever, their fundamentals are so strong that, investing in the business does still make sense in some cases. Guys, last video on Intel got a measly 1,500 likes. I know we can do better than this, so let's get together here, let's smash that like button, let's get at least 2,000 likes on this video. But either way, thank you so much for your support. So let me start off this video here with summarizing what happened with Intel, why the stock is now down 20%. The company reported their earnings, and while it was a very strong quarter for them, we know what happened with the stock. EPS here beat by 12 cents, and revenue beat by 1.15 billion, and it was up a whopping 19.4% year over year. Objectively, this was a very strong earnings result here from Intel, and to see such strong growth from a large established company of nearly 20%, guys, signals strength of demand. The blunder, however, was that they announced their 7nm chip process is delayed and is now trending around 12 months behind target. This line alone has driven a sharp sell-off and changes in sentiment around Intel, so let's see if we can capitalize on this potential opportunity. So you may be wondering, what makes this 7nm chip process so important? Why do people care if Intel is delaying it by a year? Well, if you're not too familiar with chips and semiconductors, just know that generally the rule of thumb is that the smaller the chip process is, the more efficient the chip is because less power is required, and as a result they're typically able to perform better as well. So based on this, it's a big deal that Intel is delaying this new process, but this alone isn't the case for the sell-off here, and it's a combination of the fact that their biggest rival, AMD, has already begun selling their 7nm chips, so now the fear is that Intel is falling behind in the market. But now here's the interesting thing, I did some research on these chips, and it seems that even though Intel is technically still on 10nm, it still has better performance in some cases than AMD's 7nm. This article here shows us a comparison of Intel's Core i7 1165G7 10nm CPU, and they compare it to AMD's Ryzen 7 4800U 7nm CPU in single-threaded workloads, and the results may surprise you because Intel performed 30% better than AMD did. This table shows a comparison of some of the tech specs between the two chips, and the comparison does show a big gap on paper between these two companies, but the real-world examples and real-world tests seems to show that it's pretty much a wash here, as Intel does come out ahead for single-threaded tasks. And when it comes to multi-core tasks, AMD chips do perform better. They come out around 17% faster or so, but this 17% improvement is with twice the number of cores and threads, so it's not a direct correlation. 2 times more cores and threads does not mean 2 times better performance. In this case, it only means 17% better performance. So basically what I'm trying to get across to you is that just because AMD is on 7nm, Intel's still on 10nm, it does not mean that Intel can't be competitive. Clearly there's some situations where Intel chips still perform better than AMD's 7nm, and arguably in the industry some people still prefer going with Intel over AMD. So I believe there is still a big market there for Intel to stay strong and be the dominant player for the foreseeable future. Now, if AMD is able to kind of leapfrog them and their next chip is twice or 3 times better than theirs, that's when we may start to see some problems, and that's kind of what I think the industry is starting to price in here. The fact that AMD is just going to be so far ahead that Intel will probably not be able to play catch up until it's too late. Now what makes Intel so unique, guys, is that they not only design their chips, but they also fabricate their chips in-house themselves, whereas other companies outsource the fabrication process to businesses like Taiwan Semiconductor. And this partnership and approach has helped both businesses, especially AMD in this case, to release their chips ahead of the competition like Intel. On the conference call, Intel did say they were looking into possibly outsourcing some of the fabrication. Currently sits at around 80% or so in-house, and they are fine doing less in-house if it means quicker turnaround times for their products. This of course again didn't excite investors, because one of Intel's biggest selling points, biggest moats, is that a lot of their stuff is in-house. They do things themselves. So if they go out there and start outsourcing some of this fabrication and all that kind of stuff, they start to lose their uniqueness in the industry, and as a result, some investors who initially invested in the business for that uniqueness factor have started selling out. But really, this is how I see it. If you look at what's best for the business, you want to be competitive, you want to remain ahead. What good is it having your own fabrication process and doing everything in-house if your product isn't going to be competitive anymore and isn't going to be something that consumers want? I think being open to go out there and outsource some of this stuff is a smart move, because it will help them be much more agile and catch up to AMD much quicker. And guys, it seems like Intel is sticking to what they said here and is starting to take orders from Taiwan Semiconductor, and while this is technically diminishing their moat for a fabrication perspective, I think it will help them in the long run to be competitive in this market and actually remain as the #1 player in this market. Now, this wasn't the only big change that happened with Intel over the last week. From a fundamental level, the business structure is actually changing as well. So Intel announced some changes to its management team and stated that their engineering head is leaving effective August 3rd. They will also be changing the reporting structure here internally, and the previous technology system, architecture, and client group will be split into 5 teams, and each team's leader will report directly to the CEO. The 5 departments will be technology development, manufacturing and operations, design engineering, architecture, software and graphics, and finally supply chain. The hope is that by reporting directly, there will be less hurdles and more efficiency to get Intel back in the driver's seat here. Now, like you may know, I don't hold Intel stock as of yet today, but I do like the fact that the company is adapting and they recognize issues with the business and they are willing to make changes as soon as possible. For a company this large to make some massive fundamental shifts in the business so quickly in a span of about a week is impressive and does get me interested. Now, I'll be honest, Intel looked like it was heading down the path of Cisco, IBM, Oracle, these old dinosaur companies that are still somewhat relevant here today, but there's no excitement around them. There's not much expectation for growth around them. They're just kind of there, chugging along and bringing in a decent amount of change. And Intel, in my opinion, it was kind of categorized or getting categorized in that category there. And I think that by shifting the model and by making these changes, they have potential to shift over and become more like a Microsoft or an Apple or one of those type of tech companies, as opposed to these older dinosaur companies. But now, guys, I want to spend some time looking at some charts as to why Intel, in my opinion, is still a very strong business and why investors who have bought Intel before are continuing buying the stock now, despite all of this fear around the business today. From Hypercharts, here's the company's revenue annually, and we can see it's steadily still growing. Client computing makes up half of this revenue, and the data center piece is the exciting part here, growing well over the years. I also like Intel because it's an extremely profitable company. In 2019, they posted around $72 billion in revenue, of which $22 billion was operating income, resulting in net income of nearly $22 billion as well. Guys, that's $22 billion in profits, which is a number that many companies can only dream about. And because of this massive cash buffer that they generate every year, the company can pay a nice dividend to shareholders as well. Currently, they pay around a 2.77% yield, and they've grown this dividend for 6 consecutive years, on average by around 7%. So it's a very healthy growth rate from Intel. Also, because of their massive profits, they have a payout ratio of only 27.3%. 2.3%. So they have plenty of room to grow the business and continue raising that dividend without facing any cash struggles. Based on historical metrics, if Intel can get to around a 4% yield or so, this would signal a very strong buying opportunity for the stock. But even today at 2.77%, you're beginning to see some pretty decent fair value here. And I wouldn't say that it's an undervalued business right now based on this metric, but I would say that it's a fairly valued business. Now the 4P on Intel is around a 10, which again shows me it's fairly valued. And you may think this is a huge bargain compared to the broader market, but it is kind of in line as to where Intel is historically. Usually they're around the 10 to 11 PE mark, so it's not that uncommon to see it here once again. Now, because of everything going on, their projection for 2021 revenue is a decline of 2.1%, and this isn't too bad all things considered, but that nearly 20% growth that we saw has faded fairly quickly here, unfortunately. The next few quarters are expected to see EPS decline as well, which is quite significant in the double digits, kind of 20% range. So there's a lot going against Intel right now, and sentiment has really shifted from a fairly neutral, kind of positive in some aspects company to a negative, pessimistic, bearish outlook on the company. So again, bring it all together, I'll reiterate, Intel is a strong business. They have a lot of cash, they generate a lot of cash, and they have the stability that I look for in my portfolio. That being said though, the value seen today in the stock is good, but not great. It's a fairly valued company, it's not an undervalued company in my opinion, and I'm not really interested in buying it here in the mid to high 40s. I think that if we see it drop to the lower 40s, or maybe even under 40, that's when we're going to see some very, very undervalued prices, and that's where I think I will probably open up a position if that opportunity presents itself. The one thing that I will warn though is that I think that Intel may be setting themselves up for about a year or two of just kind of a dead money growth. So the stock could probably stay in this $40 range for an extended period of time. We've seen this happen with many, many large companies. Look at Nvidia, I believe in 2019, where it was around $150 for quite a while after reporting some negative earnings and all that kind of stuff. So maybe something similar happens here with Intel. We'll probably continue around this price range until some extremely positive news comes out, or if they have some massive beats in the next earnings report as well. We'll have to wait and see, guys, but I wouldn't get too excited on a quick recovery here because fundamentally the business has changed. It's going to take investors, it's going to take hedge funds, all these other players in the market really some time to digest all this information and figure out what the new fair value for Intel is. And as of right now, it's kind of just slowly trickling down. You know, it was slightly above 50 before, now it's a bit under 50, and I wouldn't be surprised to see it in this range for the foreseeable future. Now, some of you have been buying Intel stock already at these prices right now, and guys, like I said, it's a good business. They have a good dividend, lots of cash, you know, everything around the business is good. It's just that for me personally, I've exposed to this industry already in my portfolio. So for me to really add Intel in there as well, it really needs to be an extremely compelling argument. And as of right now, things are looking good, but they're not looking great. Not great enough for me to actually put money into. So wait and see what happens, guys. Let me know in the comment section down below what your plan is with Intel. Do you plan to keep buying here as we go lower? Do you think I'm going to see a quick recovery in the stock? Let me know in the comment section down below. But either way, thank you so much for watching, and don't forget to invest positively, and I'll see you in the next one. Peace.